the amount of Bitcoin buying is much higher than the Bitcoin being mined. So it's just a question of when the sellers run out of Bitcoin to sell or decide they don't want to sell anymore.
Is that your target? The how finny prediction?
Maybe it's more, I don't know. I think a good starting point is...
There is very little retail involvement this cycle.
Yeah, I guess that's from things like Google search trends and things like that, right? It's probably our last time to buy at 6-digit Bitcoin prices. It's a race. And so, Saylor has said things like, well, he's just going to keep buying, right? And he's fearful about not buying enough. And so you've got new buyers coming in, and if you don't buy them, they will, basically. Will Bitcoin reach parity with gold?
Do you think it's a good thing that nation states start accumulating Bitcoin?
There's a saying that everybody buys Bitcoin at the price they deserve, and I think the governments deserve, a 7 or 8 figure price, right?
Yeah, welcome to another episode of Simply Bitcoin IRL. We're here in the beautiful Lugano, and I've joined with someone that doesn't need an introduction. Adam, thank you so much for joining me today.
Hi, Nico.
How you doing?
Good.
So Adam, it's been a pretty historic year for Bitcoin. Regarding the Bitcoin Treasury companies as a whole. Congratulations with the Bitcoin Standard Treasury Company. You're number 5 with 30,021 Bitcoin on the balance sheet.
Well, it depends because we are funded on close and we're waiting for regulator approval. So there is 30,021 Bitcoin, but there's also $1.3 billion, and we don't yet know how many Bitcoin that will buy. So it'll depend on the Bitcoin price at the close.
So Adam, I think one of the things that I've noticed this year is just what the market is signaling, right? So a lot of the treasury companies have gone a little bit lower, some have gone below MNAV. Where do you see Bitcoin treasury companies in the future of finance in general?
Yeah, I think the treasury company phenomena is making genuine and sustainable advantage of the capital market mechanisms, obviously arose for capital formation for building products, but work fine as a vehicle for running an operating company and reinvesting in the products, in the services, to develop more revenue, and in putting the cash reserves of the company into Bitcoin as a better inflation hedged approach. So I think what you're seeing is that active behavior, like active Bitcoin management, active operating companies, going to be favored in the future, most likely, because the market's developed a view on the MNAVs. There are a lot of people shorting them at the moment.
Gotcha. And another question for you. Because I think this is the main topic of this year, which is, do you believe that the 4-year cycle is over?
We'll see. I'm thinking that you'll still have cycles, but it may not line up with previous cycles. And the reason you get cycles is the halving cycle. I think it's a real effect. People are often skeptical that it's a smaller percentage each time, but actually it's sort of followed by another effect, which is the hodl wave, i.e. people that learn the hard way that cold storing and dollar cost averaging of Bitcoin is a safer and more conservative approach than market timing and so on. And so over time, a bigger percentage of Bitcoin are long-term stored, saved, cold stored. And so the percentage drop in the halving, it should really be considered related to, as a proportion of the Bitcoin that are on the market. And these cold stored Bitcoin are not on the market. And so then effectively that ratio is not diminishing in the way that people think it is. And also most technology adoption curves go through a kind of mass adoption surge, and I don't think Bitcoin has seen that yet. So, could get the opposite diminishing returns, but this cycle could be an interesting one for that. There's a lot of people taking profit and new money coming in. The people that are taking profit will eventually run out of coins that they want to sell, or the allocation that they want to sell, the allocation they want to hold on to. And there is a large amount of sustained buying from ETF buyers, from institutions. About 30% of the BlackRock ETF is apparently institutional. And, so that means most of the ETF buying is actually just a new, more accessible way to buy Bitcoin for probably mostly people in the bracket of the top 10% by wealth in the UK minus top 1%. So just people in the professional, like business owners, doctors, dentists, lawyers, people with a share portfolio, small business operators. And when they decide to buy Bitcoin, they just call their broker or financial advisor and they reallocate from something else. So it's not necessarily new money, it's reallocated money. And so I think the ETFs enabled that second wave, the first wave being people who bought on Bitcoin exchanges or OTC cash transactions. And the third wave being institutional. I think the institutional wave is actually very new. Like that's in effect, it takes a long time to ramp up. But nevertheless, the amount of Bitcoin buying is much higher than the Bitcoin being mined. So it's just a question of when the sellers run out of Bitcoin to sell or decide they don't want to sell anymore. And then presumably that will have an effect on the price. And then some of the people that sold might FOMO back in because, they may be thinking that looking at the history of halving, and if they see that invalidated, that will change their behavior as well. So there's a lot of market psychology in there. It's hard to predict. Bitcoin typically surprises people in some way or other.
It definitely does. Bitcoin has a tendency of doing the exact opposite of what everyone anticipates. That's been the history of Bitcoin for sure. Does it surprise you that so many OGs, Adam, have been selling as much Bitcoin as they have been?
I'm a little surprised for the reason that anybody who's been through prior cycles wouldn't feel that this is a particularly high point. Like to a lot of people, that seems like this is relatively early in a cycle, sort of price-wise, in the distance from prior all-time highs and the distance from the prior all-time low, like the prior cycle's low and things like that, right? Should bear in mind, people forget quickly that in the last cycle, there was a third all-time high shortly before the halving, which would place you a few years out still for this cycle, right? And I think also this cycle has seen smaller drawbacks. In previous cycles, you'd see maybe a dozen, 30, 35% drops. They haven't really seen that this time around. So the drawdowns are smaller, I think, because the ETF buyers, retail ETF buyers, institutional buyers, and the Treasury company buyers are not panic sellers. They're long-term holders. And so they are actually buying the dips. And there's less proportion of the new incoming Bitcoin holders in this cycle that are prone to be shaken out by a drop.
Does it surprise you that 2025 hasn't been as explosive as a lot of people anticipated? And I know having anticipations in Bitcoin is a terrible idea. Having expectations in general, but I'm going to get your opinion.
Well, it's kind of waiting game until people run out of Bitcoin to sell, basically. I think, because if you look at the imbalance, it's huge. It's like 4 or 5 times, maybe 6 times the amount of Bitcoin being mined are being bought on a regular basis. MicroStrategy is buying a couple of times the amount mined, since the halving. BlackRock ETF, about the same. There are traders who are buying 450 a day, just tactically, and buying up cheap Bitcoin at any time it pulls back reactively. And, then you've got the ETF buyers. There's really a lot of buying. I think the Treasury companies are a factor as well in total, in addition to, MicroStrategy and the rest, because they are not sellers. They've been buying and holding. So if there's a pullback, that affects their share price, but it doesn't flow through to the Bitcoin price, which is interesting. So Pierre Rochard had described that the Treasury companies are Bitcoin's shock absorber, like price shock absorber, because price pulls back, they don't sell, right? And so, if you get a lot of good investors who buy and hold for the long term, that changes the price structure for the bear. So I think the price structure is surprisingly good. The big liquidation cascade we had in the last few weeks didn't pull the price back that much. And there's a lot of heavy buying as it pulled back. So I think that shows that it's quite robust and people's confidence is quite high.
Yeah, it's different the way that it's behaved this cycle. And it seems like it's more institutionally driven. It's this small tick up very methodically. And one of the things I've noticed, Adam, is that there is very little retail involvement this cycle.
Yeah, I guess that's from things like Google search trends and things like that, right? Yeah. I think, it's probably a last time to buy at the 6-digit Bitcoin prices, right? So, for people who are skeptical, because I think it's still early. Obviously, the percentage of people that own Bitcoin is quite low. It's a race. And so, Saylor has said things like, well, he's just going to keep buying, right? And he's fearful about not buying enough. And so you've got new buyers coming in, and if you don't buy them, they will, basically, right? So I think, there's no, the average person doesn't really have any excuse. They've had a really long time to buy. It's still early. And, but sometimes people prefer to buy at a higher price. They feel more confidence at a higher price. And that's been the case historically as well, right? The the price rise has generally been kind of bouncing around the confidence and conviction that people have, and number of new people coming in. And so I think that continues to be the case.
It's human psychology, right? When the price is pumping, everyone just smash buys.
Yeah, and that's also how you get the blow off top, which I don't think we've seen yet this cycle.
Do you think that's going to happen? Do you think we'll see a parabola? And I know we're getting into speculation territory, but
it's sort of somewhat inherent in markets, but maybe it will be more muted, and we don't know actually, of course, what will happen, if it will just keep grinding higher go through to the next cycle, or if we'll have like moderate pullbacks. Of course, you always have volatility, but yeah, I think it's a slightly different price regime, and the retail may come back in, at some higher price later in this cycle.
So Adam, I remember a long time ago, I was watching one of your interviews and you had a market order to buy all the Bitcoin.
Yeah.
Do you still have that market order open, and at what price?
So it was a 2 cent. So it was Alistair Milne, who's a very early Bitcoiner. He has a tweet from 2011 saying something about Bitcoin, and started a Bitcoin Alpha Fund in Monaco. So he had placed an order for 18.7 million Bitcoin, I think it was, which was all the Bitcoin that had been mined at that time, at 1 cent. And so I thought, let's outbid him. So I put an order for 21 million just to be sure, at 1 cent, at 2 cents rather, which is $420,000. So it was actually a live order. But I think if in practice, it couldn't get filled because, it was on the Bitfinex exchange, and there are only so many Bitcoin on that exchange. So even if the Bitcoin price fell through the order, you could only possibly buy what was on the exchange. And of course, anything like that, everybody else comes out of the woodwork and places orders. So it never gets there, really. So you'd probably be more realistic to place a bid for a much smaller amount of Bitcoin at a much higher price, and then you might actually catch something in a flash crash.
I thought that was always funny when I heard that story for the first time.
Well, I mean, people like to say, Bitcoin could fall to zero. And I think Bruce Fenton said the same thing. It's like, no, it won't, because, even if something absolutely calamitous happens, people would try to buy them for collector's sake, right? And that would reboot the market very rapidly.
So Adam, you've been involved in Bitcoin since the early days. You mentioned literally in the white paper. How has that been? Could you ever have imagined where Bitcoin is today? You're the CEO of 2 major companies, the Bitcoin Standard Treasury Company, and of course, Blockstream, which is fantastic work. The Jade, I love the wallet, and all the other incredible stuff, the satellite in space.
Mm-hmm.
So could you ever have imagined this from the early days of just, working on Bitcoin?
Yeah, I mean, I think the sort of probability or the risk perception about Bitcoin reaching mass adoption was much more uncertainty early on. So, people were hopeful and excited about the prospect of finally a deployed Bearer electronic cash that was decentralized. Like the previous ones were centralized, and that was ultimately the cause of their failure. And so that started the kind of hunt, or the sort of applied research for a way to make decentralized Bearer electronic cash that, ultimately Satoshi found the missing ingredient and made it happen. But I think, at least for myself, in August 2008, when I first heard about Bitcoin, and then when it was released in January 2009, the source code, my thought was, Satoshi has solved the technical challenge, but now comes the market test. Will it bootstrap? Will it get enough interest that it doesn't kind of remain a kind of techie, computer geek experiment that fizzles or never takes off, as opposed to gets a sustainable market, maybe volatile, but that will last test of time. So I think that took some years, obviously. So, hoped it would happen, because, people like myself have been working on trying to make something like that happen for a long time. And there's a lot of excitement in a sort of Bitcoin-like vibe in the mid-90s with DigiCash, for example. But it failed. And the lesson people took from it failing was not, it's over, let's give up, but what went wrong? How can we engineer a solution to fix it? And some of the ingredients that went into that were discussed and later used or rediscovered by Bitcoin. So I think the motivation was there, desire to see it, but the confidence about whether it's actually going to happen grew organically over time. And when Blockstream started in 2014, even then there was still a lot of uncertainty about the regulatory reception, where the major countries would ban Bitcoin and things like that, right? So actually Bitcoin has had a relatively smooth and dramatic growth in acceptance among users and even amongst establishment, tax authorities, regulators and so on, which has been interesting to see.
So do you think it's a good thing that nation states start accumulating Bitcoin?
Well, I think there's two parts to that answer. One is, I think it's a good thing that they're open for business because there was some behind the scenes friction trying to slow down Bitcoin and doing undisclosed things like trying to debank Bitcoin companies, trying to make it hard for them to get banks, hard to have exchange on-ramps and things like that. So it's good that, now we have a more level playing field. Like, maybe there was a phenomenon in the internet where they had a kind of, let's just let it run and see it develop value, right? Rather than try to fight it. So you see more of that kind of vibe. And then the other side of it is, should we actually want governments hoovering up all the Bitcoin? And, I think there's a saying that everybody buys Bitcoin at the price they deserve. And I think the governments deserve, a 7 or 8 figure price, right? And so now, of course, selfishly for a small country, you kind of want your government to buy Bitcoin because then they'll have more sovereign wealth and they'll be able to reduce taxes, improve services, and make a nicer, more economic country. But on the other hand, it's actually better for the individual if governments continue to be slow to adopt, give individuals more time to buy Bitcoin. And Bitcoin is really one of the very few technology waves where the individual front run the professional investors by a decade or more.
Yo, I want to tell you about the best place to build your automatic self-custody Bitcoin stack, bitcoinwell.com. What makes Bitcoin Well different? What makes it unique? It's an automatic self-custody Bitcoin on-ramp. What does that mean? That means that when you buy Bitcoin on Bitcoin Well, as soon as the funds clear, it goes straight to your self-custody Bitcoin wallet address, which perfectly aligns with the Simply Bitcoin ethos because after all, self-custody is the revolution. By the way, if you go to bitcoinwell.com/simply, as soon as you make your first purchase, you get 3 opportunities to win up to 1 million Satoshis just for signing up and buying a little bit of Bitcoin. Seems like a win-win. What are you waiting for? Go to bitcoinwell.com/simply today.
What will be the role of Bitcoin treasury companies in the traditional financial system in the future?
Well, I've said that Bitcoin is the hurdle rate, by which I mean in hedge funds, they have a concept of a hurdle rate, which is, if they have a fund which is trying to get a 20% return, they might charge typically a 2% management fee that comes off the top. And then they would say, and then you as the investor would say, well, wait a minute, I don't want to, pay you 20% on the return for the first 5% because I can get that in something low risk like Treasury. So you haven't achieved anything by doing that. So they're like, okay, we'll take off that. So they then charge you the success rate above 5%. And that 5% is the hurdle rate. Another kind of hurdle rate or a benchmark is, what the S&P 500 or what a big stock index does, because, that generally represents economic progress. Now, I think Bitcoin is the hurdle rate because it's outperformed everything else. And so in any kind of long-term framework where you make an investment and you leave it there for a long duration, Bitcoin has outperformed anything else. And so I think, it's a neat thing to say to fund managers that Bitcoin's a hurdle rate because it just says, well, if your fund has no chance of keeping up with Bitcoin, you should close it down and start a Bitcoin fund or tell your investors to buy Bitcoin. And I think that translates for companies because a lot of people have invested in startups that have obviously underperformed Bitcoin, even in the Bitcoin space, right? And so the obvious thing for a company to combat that effect is to buy Bitcoin with your own treasury, your own cash reserves. Of course, they have to deal with volatility, so maybe they keep a certain amount in fiat and the rest in Bitcoin for long term. And so I think ultimately every company becomes a Bitcoin company. Now, for the individual, who feels like Bitcoin was for the little guy, for the average person, I think that's true, but you got to expect that anything which is a successful new money is going to be adopted by all segments of the the financial ecosystem of the modern economy. So you see it in pension funds, you see it in sovereign wealth funds, you see it in governments, in states, in individuals, in retirement plans, in companies. Why not, right? I mean, companies are ultimately just a collection of humans, and a lot of modern societies' economic progress is actually derived from the invention of, limited companies and organized by shares and a capital formation to build new products. So, some people are kind of upset about companies or think that companies are the big evil in the picture, but really, companies are just groups of people organizing to do something. And, if they're successful, they can grow, they can become public, initially on a small cap stock market, and then they can use the capital markets to raise money to grow what they're doing.
Do you think eventually, I'll use your company as an example. Do you think eventually the Bitcoin standard treasury company will become some type of new type of bank? And I'm referencing Hal Finney's original post from a long time ago, where he's talking about in the future there will be Bitcoin banks. Do you foresee that happening? And the reason I'm asking you this, Adam, is the Bitcoin treasury companies are going to be the ones that have all the Bitcoin, or a big portion of the Bitcoin.
Right. So I think that, Blockstream, the B-Star, as we call it.
I gotta call it that, B-Star.
Yeah. Bitcoin Standard Treasury, it just rolls off the tongue there as B-Star. So B-Star is trying to do some things differently. Firstly, it's mostly Bitcoin capital. About 2/3 of the money is Bitcoin, came from Bitcoiners, investing Bitcoin into a company that's going to actively manage the Bitcoin, try to achieve a return on Bitcoin. And we talked about that being a Berkshire Hathaway type of endeavor, which is a long-term capital where you try to achieve a long-term return, and then you acquire operating companies that you put under the umbrella that generate additional revenue to reinvest, grow the capital, and do it again, basically. So it's a kind of long-term capital growth activity. And, I think that's one approach. Another approach is just a existing operating company, plus, of course, all the pure plays. At the moment, as we discussed, the pure plays are not doing as well.
So one of your quotes that I absolutely love is, Bitcoin is not just a currency, it's a revolution in how we preserve and grow value in the digital age. You want to elaborate on that?
Yeah, I mean, it's, I think the younger generation has more confidence in Bitcoin than they would in investing in shares and stocks and bonds and even government bonds, let's say, right? And I think it's basically because the fiat money is being debased. So, when I was in my mid-20s, I was just trying to invest my own savings and, looking at whatever the highest rate accounts were, deposit accounts, notice accounts, shares, IPOs, things like that. And one of the things you realize, you start to look, well, what's the benchmark? What's the hurdle rate? You look for the government inflation figures, and as the consumer price index and the retail price index. And that's, you've got to outperform that. You're actually going backwards. Your savings are losing spending power. And then you do a bit more research and you realize that, well, these government inflation metrics are manipulated politically, and they don't represent the actual inflation that the average person experiences. And, they're continually to sort of erode and redefine them in creative ways. So then it becomes uncertain if you're achieving a 4 or 5% return. It actually becomes uncertain if you're actually losing money, because maybe the inflation rate is 7%. And of course, now probably inflation rate's even higher, right? So I think at this point, people need to, primary concern is protect themselves from the value erosion of inflation. And Bitcoin is a good way to do that because it's much more scarce than any other asset and get increasingly scarce over time. So there's kind of ultimately a fixed supply and a growing population. And there's also a growth curve because it's still early in the adoption. So I think it's a good bet for both of those reasons as an inflation hedge. And, if not for Bitcoin, I think, what I would be inclined to do is buy real estate, a rental apartment or something with a mortgage, because in that way, the inflation's working for you, right? You benefit from the inflation if you are buying hard assets with other people's money. And if you like, that's kind of what treasury companies are doing with the convertible notes and the bonds and preferred shares and things like that. They're buying a hard asset with money from people who just want a fixed income or a risk return profile that's something more conservative.
Do you think that the movement has changed a little bit since, Bitcoin has entered TradFi?
I hope not, but I recently posted a paragraph from the Eric Hughes 1993 Cypherpunks Manifesto to ask the provocative question, are people prone to re-inure themselves? Inuring was this kind of matrix quote about the system, people in the system being hopelessly inured with it. And so are people in a Bitcoin space, Bitcoiners, looking to re-inure themselves as Bitcoin gets, more mass adoption? And so my hope is that Bitcoin remains the cypherpunk money because, part of the story for me, so you mentioned a revolutionary idea, is that Bitcoin changes the world, not that Bitcoin gets some success and then we mute it and put it in a box and, lose all of the bearer properties or something, right? So, and I think some people are kind of more concerned about muting Bitcoin or changing it to kind of conform to what they think establishment might want, which is not really the point. I mean, the internet didn't contort itself to, comply with establishment control of media and stuff. The internet was just the freewheeling, self-sovereign individual space and largely kept that. So I think it's important that Bitcoin keep that phenomena.
I think self-custody, I want to get your opinion on this. I think self-custody plays a crucial role in that. So I want to get your opinion on that, the role of self-custody, specifically with individuals.
Yeah, I mean, I think that Bitcoin held in self-custody is a more bearer asset. It's a better insurance policy. And actually, Bitcoin that you somehow acquire without there being a record in a traditional finance collective memory that gets reported on tax returns and things, the better, because money that, hard money in bearer form that nobody knows you have is even a better insurance policy because the establishment can't come in some kind of adverse situation where you need the insurance policy. They don't even know you have it. That's even better, right? So I think Barack Obama gave one of the best inadvertent advertisements for Bitcoin when he said, well, if we can't crack it, he's talking about security of wallets on phones, then everybody's walking around with a Swiss bank account in their pocket. And I'm like, yes, that's correct.
That's the point.
I mean, he was thinking this is a very bad thing, but I'm like, no, that's a very good thing. And so here we are sitting in Switzerland in, the third Swiss private banking city, actually. So this is the competition, right? The Bitcoin is lowering the barrier to entry to, which is asset protection, financial privacy, and making it hard for the establishment to seize your assets in your home country. And in Bitcoin's case, that's achieved through key storage. So, it's a better setting if you get into some unexpected situation where you need the insurance policy that the establishment has to come through you to get to your assets. Whereas if they just place a phone call or write a letter to your broker or your bank and then all your assets are frozen, now you have a problem, which is you can't even afford a lawyer to defend your innocence in whatever they're throwing at you. So the establishment, the governments are civil servants. They work for society, they work for us, right? And so, some of the changes that they've brought in the name of law enforcement and criminal justice have swung too far. And I think the cypherpunk technology is the way to reestablish your, actually legally protected rights that they've overridden, or just to reassert, just to assert them individually.
Do you think central banks and Bitcoin can coexist?
Yeah, I mean, it's a very interesting question because a few years ago, my worry would have been that the market incentives around Bitcoin that make it work, the miners, the users, the market, people buying, selling Bitcoin, the miners mining new Bitcoin and they're incented to do so honestly, that it was a bit of a question if those incentives would continue to function smoothly and effectively as the ownership spread into public companies, sovereign wealth funds, individual states, governments, and, when you would have politicians talking about Bitcoin. I think, with the benefit of seeing what's happened in the last few years, that actually it worked better than might be expected, it turned out to be more of, you don't change Bitcoin changes you. And it seemed to change, the sitting president of the US and his kind of business empire, his sons who work in it, that they got debanked politically and they learned firsthand why having bearer hard money matters. And, you have politicians in the US who are, seem to be philosophically motivated. Like they personally hold Bitcoin, they seem to understand it. And so Bitcoin does change the incentives of all kinds of people. So it turns out that effectively incentives matter and wholesome incentives are a very powerful force in the world. So I'm actually quite hopeful at this point that it will scale all the way. And of course, there's still a lot of distance to go, right? With bigger countries buying meaningful amounts of Bitcoin, doing larger amounts of sovereign buying, and what happens to the geopolitics in this new era. And it's it's not without precedent in a sense of a shift in the asset that people cover in kind of global geopolitics. And it used to be gold, and then it became black gold, like oil, and now it's Bitcoin and the resources, cheap, abundant power, access to silicon fabs to manufacture the miners. And that seems to be sort of mapped out to be the geopolitical underpinnings of the next 50 years or something. So I think we haven't, I think there's a lot more interesting things to come.
Do you need liquidity without having to sell your Bitcoin? For more than 6 years now, Ledn has been the trusted source for Bitcoin-backed lending, with transparency, security, and trust at their core. Backed by $9 billion of Bitcoin loans funded and over 1,000 5-star reviews. I absolutely love these guys because of their flexibility. You can pay back your loan whenever you want. And there are no monthly payments, so you pay at the end of the term. You get lightning fast access to capital. As soon as you send your Bitcoin as collateral, you get the cash into your account within 18 hours. Unlock the liquidity of your Bitcoin without having to sell your Bitcoin. Simply Bitcoin viewers get 0.25% off their first loan by using the link in the video/podcast description. What are you waiting for? Check out Ledn today.
So Adam, Blockstream's played a key role in trying to crack the nut. I don't know if that's the right expression, but trying to figure out the scaling. So I think there's been a tremendous amount of progress with Liquid, with Lightning, but nothing's quite there yet, right? I love Samsung's recent implementation with the Aqua wallet. You got Liquid involved. So I want to get your take on the current state of layer 2 scaling solutions. What's on your radar? What has you the most excited?
Yeah, so I mean, actually, Blockstream is kind of Bitcoin layer 2 company, but also does a lot of kind of core R&D. So the Schnorr signatures, the music, that was a group effort with independent researchers, people from other companies, academics. But a lot of the heavy lift was actually done by Blockstream researchers, Blockstream labs, and we have been active in a lot of layer 2s. Of course, we got into Lightning early, and then Liquid. So with core Lightning, that was the first Lightning implementation that had live value, which is where the reckless tag came from, because we were the first to put like an experimental implementation with live value. And then with Liquid itself, partly a scaling solution, but mostly about the ability to innovate permissionlessly on a second layer, which is technically a sidechain and not unilateral withdraw layer 2 like Lightning. But we also implemented, did the R&D on what became Fedimint. So that was the Blockstream R&D project as well. And they're doing very interesting things with that. Of course, you then have Cashew as well. And the other new phenomena are Arcade and Spark productizing state chains or Mercury layer. So they kind of made a twist on somebody else's project. And of course, there are also the kind of color coin, Lightning enabled color coins like RGB and Taproot assets. But one of the surprise scaling things, I always like it when, because I think that technology evolution is not something you can fully plan. You just try to organically build what you think is the best thing you can build with the current state of the R&D. But sometimes the market surprises you, finds a novel use for something. And that's what happened with this kind of hybrid Lightning Liquid wallet, which is now growing faster than Lightning wallets. So a pre-event yesterday, Francis Pouillet, Bull Bitcoin, was talking about, the new Build Bitcoin wallet, which is using the same model. And there are, Breeze was also there. They have, their own Lightning wallet, but they also have SDKs to help other people integrate Lightning into their products. About 50 different wallets or applications built using that. They're also seeing much faster adoption of Liquid Lightning hybrid wallets. And, even the evolution of the trustless swap that enables that came about because of the NFT spam wave a couple of years ago, where Boltz Exchange, which historically was operating a trustless swap between main chain Bitcoin UTXOs and Lightning. So you could take money out of a Lightning channel, or you could add money back to a Lightning channel without closing the channel. And the spam is so annoying, this spamming stuff, but they pushed the fees up, and it kind of broke their application. Like, it made it so expensive, it became unreliable. And so they did a hackathon and hit on the idea of swapping liquid Bitcoin for main chain Lightning channel rebalancing. And even after the spam subsided, all the NFTs got rug pulled, etc., then that remained their highest value and highest volume use case. And then Aqua Bitcoin was the first to get the idea of, well, let's use this liquid to Lightning trustless swap, because it's a submarine non-custodial trustless swap. And it gives you a lot of advantages. It gives you the kind of usability experience of a custodial wallet, but it's not custodial. And of course, Liquid has a different trust model than main chain or Lightning, but it's quite compatible with Lightning. In some ways, it's more secure. It's not as hot and all this kind of thing. So it gives you that advantage. Plus, you don't need the LSP setup stage where, if you want to receive some Bitcoin on Lightning as a new user and you just installed a wallet, well, somebody has to send some Bitcoin towards you, or that can't happen. And that becomes a funding problem, and it has a setup cost. So with Boltz Exchange, it's actually it's using the liquidity of Boltz Exchange, basically. So that's all very interesting. The one kind of area it's not able to do as well is the really small zapping, because the minimum fee is basically the minimum fee on Liquid.
Yeah.
Now, I think the new area, which is quite interesting as an avenue for improved layer 2 security, because I think where the action is improving the security of layer 2 until you can get more of the same security assurances to get on the main chain. So I think ultimately we're going to need that for lots of people to be able to self-custody, or Bitcoin to behave like the Internet of Money, where other things are built in layer 2, like, on top of TCP/IP, that you need to improve the security of layer 2. And Robin Leiner's BitVM idea is a novel prospect that you can actually verify a zero-knowledge proof or some kind of challenge response protocol in a Lightning-like reactive way, and verify, disproofs about, a small subset of a proof that where the cheat happened, where it's invalid, in existing Bitcoin script, which nobody saw coming. It's a very interesting proposition, and I think there are multiple projects that are improving on that rapidly. So there's BitVM2, BitVM3, BitVMX, and Glock, which are all using increasingly more efficient anchors and proofs. But I think ultimately what Bitcoin can do is add the mature sort of high security assurance version of something like this natively, or something like Simplicity. And then, that might require some opcodes or Simplicity to have the extensibility. Then we get closer to being able to practically ossify Bitcoin, which I think is also important for the long term. I think it's getting increasingly risky to have Bitcoin change. And this is, so I think to ossify Bitcoin, we really need to be able to move all the permissionless innovation into layer 2, and for that we need security, so we need things like BitVM. So I think that's where the new action is, and Blockstream has been active in some of those things as well, with Bulletproofs and Bulletproof++, and collaborating with some of these projects with cryptography.
I never forget one of the videos that you made, and it always stuck with me. It was basically, I'm paraphrasing here, but you essentially said, I spent 6 to 9 months trying to see how I could make Bitcoin better.
Yeah.
And you obviously have the background to do that. And the conclusion that you got to was basically like, look, there's going to come trade-offs, and none of those trade-offs are worth it.
Yeah, that seemed to be the case. Yeah, it wasn't what I'd expected. So, when people come to Bitcoin and they're sort of dismissive, or say, well, it's the Model T Ford, we're going to have much fancier cars with more technology in the future, or the same for the first, the Wright brothers kind of bicycle-powered airplane, right? So for technology in general, it's a reasonable assumption, but somehow Bitcoin exists in a narrow area of design space where it's much more low-level, fundamental, connected to physical scarcity through mining. It's, in a way, it's a more low-tech thing. I mean, I know the programming and the game theory is not so simple, but ultimately it's low-tech and fundamental. And it seemed to me that anything you try to change to improve on that, faster processing time, ability to mine with smaller equipment directly rather than using pools, add more privacy, add more scalability, it just made it worse. It tended to break. Something would get worse, and the small gain you made was not worth it. So it was kind of surprising thing I came to learn that, no, you've got to respect the building blocks. The building block is like, It's like the gold atoms in the gold bars when people started using gold as money, that, we have gold 6,000 years later and nothing changed. I mean, yeah, maybe gold assay technology, X-rays and stuff, like some stuff around it improved, but gold is gold. I think that's the way it is with Bitcoin. You can incrementally improve the network protocols, add opt-in, smart contracting things to help with layer 2 or to help with cold storage. But the fundamentals, the 21 million limit, the supply curve, the mining, I think none of this stuff is ultimately proven to be improvable. So, of course, it's not a message that the altcoin phenomena wants to hear because they're marketing improvements or branding and stuff like that. But I think it's fundamentally true.
I want to give a shout out to our partner, sat123.com. Sovereignty isn't just about your money. It's about your communications too. When the grid goes down, most people go dark. Cell towers fail in hurricanes, cyber attacks, and blackouts. But satellite phones, they don't rely on local infrastructure. Iridium has 77 satellites in orbit, giving you a direct line anywhere in the US, even offshore. If you hold your own Bitcoin keys, you should hold your own comms too. Sat123.com also has everything you need to start building your Bitcoin citadel. Starlink, battery backups, Faraday bags to protect your hardware wallets, and much, much more. It's a one-stop shop for anyone serious about resilience and off-grid independence. Stay connected, stay independent, stay sovereign. Go to sat123.com/simply today and use promo code SIMPLY to get 15% off anything on the store.
One of the things that surprises me the most is the fact that ultimately at the end of the day, I am not a technical guy. I'm a media guy, right? So I interact with layer 2 as a user. And I tried setting up a self-custodial Lightning wallet, and it was an absolute nightmare and I could not figure it out. But what really resonated with me was the custodial Lightning wallets. They worked extremely well. And I think a lot of the success came from that wallet of Satoshi, and, became extremely popular. The Primal guys, I think, are doing a great job. Do you think, but it kind of defeats the purpose in a way, right?
Right.
Do you think we'll ever get to a point where we will have layer 2 non-custodial solutions?
Yeah, I mean, that's the hope. So I think that it's not easy to transfer the kind of bearer, unseizable security properties from the base layer to the layer 2. So Lightning partly achieves it, but even that's making trade-offs, right? To do it, you have a hot wallet, there are watchtowers, it's not as cold, it's reactive security, whereas Bitcoin main chain, you can make a cold storage backup, store it in a hole in the ground or a safe, and still receive money in it, right? It's a much different picture, a higher assurance picture. But Lightning has a lot of advantages. It's nearly instant payment, it's much more scalable, it's a lot more private, it's much faster settlements, it's much better experience for retail trade users. So I do think the hybrid wallet, the liquid Lightning wallet, which Breeze is calling nodeless Lightning to give the concept a name, and I think that's sticking because nobody else had thought to name the phenomena, is a new, interesting new sweet spot. And I think people are just generally trying to converge and improve the usability, improve the backup so that it feels safer, easy to understand, and just works, And I think some of these hybrid apps are getting there. And the other interesting thing is that Lightning is, finding a new home as well, which is a connector between different Bitcoin layer 2s.
Do you think Bitcoin was discovered or invented?
I think it's a discovery. So, the people like to talk about Drake's equation, which is the sort of probability there's intelligent life on another planet in a galaxy, universe, what have you. And so I think one, new indicator now is the thing glowing hot from like all the mining around the Dyson sphere or something, right? It's a new sign for intelligent life that they rediscovered Bitcoin. Because I think it's, it is a sort of very sort of fundamental basic thing that would eventually be rediscovered. And effectively, a lot of things that were mechanical and analog got improved by the digital world. Digital ignition on a car. Once you have a digital capability, you can just make a lot of things like, combination digital and analog variants or pure digital variants better than the original. And so Bitcoin is that. It's a better monetary technology because it involves digital assurances, mathematical assurances, and yet it's still, as physically rooted in the physical space as gold. But, because of the digital phenomena, you can have much higher real-time assay assurances, and who the heck knows, how much gold is in Fort Knox, right? It's hard to tell, and they're not going to tell you. But with Bitcoin, you know how many Bitcoin there are.
You were talking about the hurdle rate earlier. What do you think and again, heading into speculation territory, but what do you think the CAGR is going to be moving forward?
I don't know. I haven't really been tracking it, but I guess it's been, between 60% and 30% generally. And there is of course, fiat as a moving target, it's getting inflated heavily. But even if you use sort of net present value, inflation adjusted dollars as your benchmark, I think there is an addressable market that will eventually get saturated. And we don't know if it's a full Bitcoin standard, like Safety Namouche likes to talk about, or if it's, a gold analog that gets more adoption than gold. And, the fiat currencies continue as a parallel system, and this is for saving, and the fiat currency is for borrowing and spending. So we don't know where that's going to shake out or how fast it's going to be to get there. But you can see that, Hal Finney's crazy prediction before, like on the first day the network launched, of 200 trillion or 10 million a coin is already, 100 times out roughly from where we are now, right? And there's realistically been quite a bit of quantitative easing driven inflation since he said that, right? So, and maybe the addressable market is actually a bit bigger than that because, he just did a crude analysis, and there's a lot of money and money substitutes in the world between, the stock market, bonds, real estate, all of the things where people are just trying to preserve spending power. So it's not clear how long it will take to get there, whether that's another decade or 2 decades or what have you. You don't know. So it's hard to say what the inflation rate, or the CAGR would be. But I think even once it's reached saturation, the other interesting thing is, would you diversify away from Bitcoin at that time? And I think the answer is no, because, it's a scarce hard money that preserves its value in the same way that gold has over remarkably long periods of time, right? But, the adoption curve would slow down at that point because it's basically reached some kind of stable point where everybody that wants Bitcoin exposure has got Bitcoin exposure at the ratio, the level they want. So I'm not sure.
Where are we on the adoption curve, right? Because there's the innovators, the early adopters. I don't know what comes after that, but the bell that makes the rounds on X.
I mean, if you look at the Hal Finney addressable market, we're at 1%, right? So that's a long way. But I think it's also a little misleading because there's a capital multiplier in any investment asset where price is set at the margin. So, for the price to go up 100 times for Hal Finney's target doesn't require 100 times more money. Because, if a government tried to buy Bitcoin in volume, they'd exhaust what's on the market and push the price up ahead of themselves. So it's a plausible amount of money that would have to go in over the next decades to make that happen.
And you think, is that your target, the Hal Finney prediction?
Maybe it's more, I don't know. I think a good starting point is, will Bitcoin reach parity with gold? And gold is on an all-time high right now, right? But it's still
it's like 1 point something million, right?
Yeah. So I think it used to be like $1 million, now maybe it's $1.2 million per Bitcoin for gold parity. But I do think there is some feedback loop between gold and Bitcoin if it gets closer, because the people investing in Bitcoin ETFs are reallocating from something else. And, an obvious answer, if a broker asks you, well, what do you want to sell to buy the digital gold? Is you say, well, sell the physical gold, right?
Yeah.
And the proportion of physical gold that is in ETFs is a much smaller proportion than the Bitcoin that's in Bitcoin ETFs. So I don't know if it's the case, but, for the price formation that is in the ETF markets, it's much closer to parity in terms of available market size. So if that were the market that's sort of transitioning and normalizing, it could start to cannibalize and take the shine off of gold along the way. So it's not just that it has to, meet gold as a static target, it can see a reallocation from gold. I think it's also a generational thing. I think gold is something the older generation probably likes more. As the younger generation inherits portfolios with gold and stocks in it, they're more likely to reallocate to Bitcoin.
Final question, Adam. And I have a caveat. There's one rule. If you can go back 20 years and tell one thing to your younger self, what would it be? And it couldn't be buy Bitcoin.
Okay, that's my go-to. Yeah. I think it's important for technology to publish early and often. So sometimes I will sort of self-criticize an idea and not publish it. So I'm like, oh, it's not good enough. It's not, it's not efficient enough. It's not practical enough. Try harder, try work on it privately to get to be better. But actually, that was the case with confidential transactions. I thought, oh, it's not efficient enough. So I just kept working on it. And then I made some kind of misthink and I thought, oh, I found a way to make it efficient. I published it and I realized, oh, that's wrong. That efficiency is actually worse than I thought. But then it was out there and then people tried to improve it. Never really managed to improve it very much. Greg Maxwell made an incremental improvement and then we implemented it, but it got implemented at an efficiency level that I was like, this is not good enough. And now, of course, my target was actually Bitcoin adoption rather than Bitcoin layer 2 adoption, but still, it shows you that you should publish early and often because it invites collaboration, and effectively the bulletproof direction came out of the confidential transactions track in a way, because we reached out to some academics with Blockstream and to see if they had any ideas how to improve confidential transactions, and what they came out with was bulletproof, which does allow you to make a more compact confidential transaction, but it's also a whole snark-like competitor with a more Bitcoin-like security model.
So it's basically iterate as fast as possible, and then that's how you'll run into discoveries.
Yeah, well, I mean, and also, share the, publish, share, discuss the pot finish solutions, because you get more brain power and feedback from interacting with other people.
Gotcha. Adam, back. Thank you so much for joining me.
Thank you.